Welcome to the Deep Dive. We're here to plunge right into the insights you need, fast. And today, we're looking at something that definitely got Wall Street talking, Amazon stock. It's taken a bit of a dip recently, so the big question is, panic time? Or maybe something else.
Yeah.
We're grounding this deep dive in an article by Tony Hicks from August 2nd, 2025. It's titled, Amazon's Discount Sale. Why this dip is a gift. And our mission, really, is to unpack Hicks' main point. He calls this dip a blessing disguised as a heart attack, which is quite a phrase. He thinks it's an opportunity for long-term investors. I mean, Amazon stock, it's always been a roller coaster, right?
That's definitely true. It tests investors' nerves. And, to get what Hicks is saying, you have to see Amazon for what it is. It's not just some regular company. He calls it a conglomerate that swallows industries whole. It's just unique in its scale and reach.
A titan, yeah. So this isn't your standard market wobble we're discussing.
Exactly.
Okay, so let's get into the dip itself. It happened. What does Hicks think is behind it? Why now?
Well, he speculates a bit. It could be a few things. Maybe, like he suggests, revenue growth slowed a smidge. That can spook investors.
Yeah.
Or perhaps margins took a hit. Or, you had some analysts starting to shout, peak Amazon.
The peak calls.
Right. But Hicks also suggests maybe it's simpler. Maybe the market's just reminding us that, well, stocks don't just go up forever in a straight line.
A reality check.
Kind of. But his main point is, for a company like Amazon, with its track record, its sheer pedigree, a dip like this usually isn't, doom and gloom. He literally calls it an engraved invitation to buy more.
An invitation? Okay, that's a bold take.
Yeah.
And it loops back to what makes Amazon different. It's not just the online store anymore, is it?
Oh, far from it.
We're talking e-commerce, cloud computing with AWS, entertainment, logistics, now healthcare, groceries, AI. It's everywhere.
Precisely. Hicks really drives home this idea that this is not a company on the brink. This is a company on a coffee break.
A coffee break. I like that. It implies it's temporary, just pausing.
Yeah, it's diversified. And if you look at the pillars holding it up, you see why Hicks sees this dip as maybe strategic.
Okay, let's do that. Where should we start? Maybe with AWS. Hicks calls it the silent profit engine.
Good place to start. AWS is, well, it's where the big money is made, where the margins are fat, as he puts it. It's still the leader, the king in cloud, even with tough competition.
Microsoft Azure, Google Cloud, they're definitely in the game.
They are, absolutely. Azure is nipping at their heels. Google's a serious player. But the article stresses this stock dip. It doesn't really change the fundamental strength and profitability of AWS. Cloud is just a different beast financially.
Higher margins than retail, for sure.
Much higher.
Okay, so what about that retail side, then? The e-commerce core. People get nervous about that in slowdowns, don't they? Thinking, consumers will cut back.
Hicks tackles that head on. He basically says, thinking people will just stop buying online. Newsflash, they won't. His point is, e-commerce usage globally is still climbing.
Still growing overall.
Yeah, and Amazon owns a, quote, ridiculous share of that market. Even with Walmart, Target stepping up their game, all the Shopify stores. Amazon is still the place people go first, the default online mall of the planet.
That default status is powerful.
Very resilient.
And part of that resilience, I guess, is their own delivery network. Their logistics are just massive.
Oh, absolutely massive. And Hicks makes a crucial point here. Those warehouses, the vans, the planes, they're not just costs on a balance sheet. He calls them moats.
Moats. Like barriers.
Exactly. Huge barriers to entry. They keep competitors out and cash flowing in. He even says this whole setup makes FedEx sweat and UPS look over its shoulder.
Wow. So it's not just about delivering Amazon packages anymore.
It's about dominating the entire logistics chain. It's incredibly hard and expensive for anyone else to copy that scale.
Okay, so the current businesses look solid, according to Hicks, but Amazon's always looking ahead. What about their future bets?
Right. They never sit still. Hicks says Amazon doesn't just dip toes in, it dives in head first.
Like healthcare, AI.
Yeah, healthcare, AI, streaming, grocery. He gives examples. Whole Foods wasn't just buying a grocery chain. It gave them a foothold in physical grocery.
A physical presence.
Which is hard to replicate quickly. And Prime Video. Buying content, winning awards, that's all about keeping subscribers locked in the ecosystem.
Keeping them sticky.
Exactly. And Alexa... Okay, he calls it being in its awkward teen years.
Oh, okay. Meaning it's still figuring itself out.
Sort of. It's not perfect. Its full potential isn't realized yet. But it's clearly a long-term strategic play, embedding Amazon deeper into our lives through voice.
Makes sense. And tying that ecosystem together, Amazon Prime. Hicks calls it money printer. How significant is Prime?
Hugely significant. It's that sweet, sweet subscription revenue. Think about it. Millions of people pay Amazon annually for the privilege of spending more money on Amazon.
It does sound a bit crazy when you put it like that.
He jokingly calls it a cult, but with faster shipping and streaming perks.
Okay.
But seriously, that recurring revenue from Prime is immense. It fuels so much else.
All right, this picture's looking pretty strong, pretty dominant. But surely there are risks. Hicks must acknowledge those.
Oh, he does. He's clear about them. Regulation is always a shadow over a company this big.
Antitrust concerns, yeah.
Right, plus ongoing labor issues and just constant competition. You can't ignore those. But, and this is key, he contextualizes it. He says these risks have existed for years. They aren't new threats, mostly.
And Amazon's still here, still growing.
Exactly. It keeps marching forward, crushing expectations in the long run. That's his perspective.
And historically, Amazon has weathered some major storms, hasn't it?
It really has. Hicks points this out specifically. The dot-com bust, they survived that when many didn't.
Right, back in the early 2000s.
The 2008 financial crisis, even the recent COVID supply chain chaos. And the pattern he highlights is that every single time, they emerged stronger.
So the argument is, history suggests resilience.
Pretty much his conclusion is quite blunt. This time will be no different.
Okay, so boiling it all down, Hicks' message in this article seems to be this stock dip. It's like a sale. He calls it a coupon code for shares of one of the most dominant companies on Earth.
That's the essence of it.
He even kind of thanks the panic sellers for the opportunity.
Yeah, he does. And encourages long-term investors to basically enjoy the discount.
Interesting perspective.
Yeah.
It really focuses on the long game.
It does, which leads to maybe a final thought for you, our listener, to consider. How does really understanding a company's diversification, like Amazon's across so many different industries, and its track record, its historical resilience, how does that change how you look at short-term market bumps, at volatility? And maybe, what does that make you think constitutes a real bargain when you're investing?
That's definitely something to mull over. Thinking beyond the day-to-day chart wiggles. Great stuff. Thanks for joining us on this deep dive. Keep exploring, keep learning. We'll catch you next time.